Investing in blockchain stocks. The purpose of blockchain is to create digital records of certificates, contracts, and transactions. Multiple companies with decentralized systems are using blockchain to improve their operations. It is essential to differentiate between cryptocurrency and blockchain because people fail to distinguish between the two concepts. Blockchain is the technology that powers cryptocurrencies and has numerous applications that have nothing to do with digital currencies or bitcoins. Here's why investing in blockchain is best. The company can become more efficient by using blockchain to unlock higher profits by reducing their costs. Blockchain is currently attracting high traffic from large firms such as Amazon. The COVID-19 pandemic has forced the world to go digital, and blockchain goes together with other technologies like cloud computing. Blockchain has gradually promised trust and transparency that has made it attractive to investors. Companies using blockchain have a competitive edge over their rivals. Food production and pharmacy have taken advantage of blockchain. Economists have estimated that blockchain technology could improve the global domestic product, explaining why investors want to give it a trial to firms dealing with blockchain-related products. Tips for investing in blockchain technology. Conduct due diligence. You need to do some due diligence before you invest in blockchain because companies make use of technology in a more efficient way than others. Ensure you do your research thoroughly to know the fundamentals of a company before investing. Look at factors such as the opportunity for growth and the competitiveness of the environment, and other factors that make it different from other projects. Treat blockchain as a high-risk, high-growth sector. Blockchain is a high-growth sector but exposes entrepreneurs to numerous risks. It is advisable to invest a small chunk of your capital in blockchain and diversify in other projects because the utility of blockchain remains unproven. Watch out for new laws and regulations. The blockchain sector is not fully formed. It, therefore, means there is so much to expect in terms of legislation regarding the industry. Government agencies may make laws that may adversely affect this sector, and keeping yourself updated is the best way to mitigate this risk. Concentrate on Bitcoin connection. Blockchain investing has an advantage over Bitcoin investing, but Bitcoin has remained the most successful use of blockchain technology at the moment. An investor can earn from blockchain technology by focusing on companies that deal with Bitcoin. Some companies with Bitcoin on their balance sheets like Coinbase, PayPal, and Galaxy Digital are the best to invest in. Investing in blockchain technology. One of the simplest ways of investing in blockchain technology is buying shares in a public traded firm that is building or using blockchain technology or working with cryptocurrency. Blockchain technology is a risky venture because it is still immature and has not fully proven its viability. Blockchain is not very different from other technologies such as electric aviation, spatial computing, and quantum, which involve taking a risk. 1. Stockpiling Bitcoin. Investors can decide to stockpile gold and others to accumulate Bitcoin, both anticipating the value to rise. The difference between the two investments is that Bitcoin is intangible while gold is tangible, but their investment principles do not change. The generation of Bitcoins in the early days was fast but has slowed down due to reaching its built-in limit of about 21 million coins. The decline in the creation of Bitcoins has resulted in a fall in the supply of the product. A fall in supply raises the demand and value according to the law of demand and supply. 2. Blockchain penny stocks. There are other penny stocks such as Litecoin and altcoin besides Bitcoin, which form the digital currency. The penny stocks are an alternative for Bitcoin even though Bitcoin remains the best. Some of the alternative digital currencies have been designed to complement Bitcoin and fill the gaps left out by Bitcoins. Bitcoin and penny stock indicate some risk, and it is ordinarily advisable that investors do not bet more pennies than they can afford to lose. 3. Crowdfunding. Crowdfunding is another blockchain investing method that uses alternative coins and has become a giant investment option for raising seed capital. The cumulative supply of coins is pre-mined in crowdfunding and later sold in an initial coin offering before publicly launching the network. One of the coin networks that used crowdfunding to get started is BitShare. Investors usually get a chance to buy coins anticipating that prices will increase upon the service gaining popularity. 4. Angel funding and startups. The increase in the number of investors using Bitcoin has also brought a rise in cryptocurrency usage. 5. Pure blockchain technology play. Established companies such as International Business Machines and Intel corporations are making huge investments in blockchain technology for use by multiple industries. Other companies like Silvergate Capital Corporation and Galaxy Digital Holdings are making use of blockchain and cryptocurrency. It is advisable to invest in stocks issued by large financial service firms testing blockchain technology's potential to improve services. Entrepreneurs who can tolerate a higher degree of risk can invest in pure blockchain technology, which could turn out to be a perfect combination of risk and potential return. Companies that have embraced blockchain technology. 1. NVIDIA. NVIDIA is a leading designer and manufacturer of graphics processing units, crucial units in the gaming, artificial intelligence, and autonomous vehicles industries. Miners use unique graphics processing units to process transactions on the blockchain, and in return, they are rewarded with newly minted coins. Renewed interest in mining has come as a result of the rise in the prices of cryptocurrency. 2. CME Group. CME offers derivative securities for stocks, foreign exchange, and indexes and is also the world's most extensive futures and options exchange. CME is the sole exchange creating a market for Bitcoin future arrangements. The company is bound to get more profit due to the rising Bitcoin interest and a potential increase in the price of Bitcoins. CME benefits from a small fee for each transaction that arises out of its exchange. A continuous rise in cryptocurrency interest could offer an exchange for other products in the future. 3. Square. Square is a financial technology also known as fintech is composed of two business models. The two models are its cash application person-to-person payment platform and the processing ecosystem model for small enterprises. Fintech also has a Square online store, a stock trading platform in addition to other platforms. The Square company cash application helps users to purchase and sell bitcoins fast and quickly. The company also owns a team of Bitcoin developers called Square Crypto that has numerous projects. The two stated ways make the Square blockchain. 5. IBM. IBM is trying to revive its operations which have retarded for some time. IBM is doing well when it comes to blockchain due to introducing various solutions to its clients. IBM blockchain mainly tries to help clients develop more reliable supply chains due to interruptions of supply by the COVID-19 pandemic. 6. MasterCard. MasterCard is one of the leading payment processing companies over the years. MasterCard is still looking to maintain its performance now that the world is working towards achieving a cashless economy. For the stated reason, blockchain has come in handy to solve the money transfers across borders, which has traditionally been very slow. The partnership between MasterCard and blockchain technology to design a new cross-border platform might give the company a competitive edge. MasterCard also improved its CryCard partner plan, which has made it cheaper for partners to bring cryptocurrency payment cards into the market. 7. DocuSign. DocuSign company boasts of being the leading designer in the electronic signature industry. The use of electronic signatures has gained immense popularity among companies due to saving time and resources. The electronic signature company has been using blockchain technology in its operations since 2015, which allows clients to record their agreements on the Ethereum blockchain. 8. Amazon. Amazon operates the most comprehensive electronic commerce platform globally and their leading cloud infrastructure service known as the Amazon Web Services. The Amazon Web Service, abbreviated as AWS platform, offers Amazon-managed blockchain, which helps customers to design and manage their networks. There is a growing possibility of Amazon incorporating blockchain technology into its huge electronic commerce business. Currently, Amazon does not earn much from blockchain, but there is room for growth and improvement. Advantages of investing in blockchain stocks. 1. Transparency. Blockchain has become so popular among investors because it is an open-source technology, meaning that users and developers can modify it to their tastes. The most important of blockchain technology features is the difficulty in altering logged data, making blockchain a credible platform. 2. Reduced transaction costs. Blockchain makes it possible for person-to-person or business to transact without a bank that acts as a third party. Lack of intermediaries in the form of banks while executing transactions can significantly minimize the cost to the transacting parties. 3. Faster transaction settlement. Transaction processing through traditional banks can take several days to settle due to the banking software protocols and the limited number of days that bank work. Most banks operate for 5 business days from Monday to Friday. Other factors that delay transactions like the location of the financial institution, which may be affected by time zones causing a delay in transaction processing. On the other hand, blockchain technology processes transactions around the clock, 7 days per week, meaning a higher rate of processing transactions. 3. Decentralization. Lack of a central hub for blockchain technology means that instead of running a massive data center to verify transactions through the hub, blockchain technology allows every transaction to prove validity and authorization to enforce the constraints. If information falls on a cyber criminal, the damage would be very little because only the information on an individual server and not the whole network would be at risk. 4. User-controlled network. Users and developers run the show in blockchain technology, eliminating third parties from making the shots, which is an encouraging feature for many investors. Despite all the stated advantages of investing in blockchain, investors tend to overestimate how they will adopt new technology quickly. We are not very sure what kind of blockchain technology businesses prefer, and therefore putting a value on the blockchain becomes very difficult. The value of the cryptocurrency has been driven up by anticipation of blockchain success, which may not be realistic shortly. The potential of blockchain becoming a massive investment cannot be ruled out, but it may take longer than anticipated and could pose a problem to cryptocurrency investors. Final thoughts. Many investments take a long time before they mature, and investors need to plan well and be prepared for any outcome. It is good to invest in risky projects because they have a high rate of return attached to them. However, it is also crucial to weigh out the available alternatives well when investing. A starter investor should not rush to invest in a precarious investment like blockchain because they may tie their limited capital for long and incur losses that they may not recover. Blockchain offers an alternative investment that an investor should research well before diving into it. Most of the companies that have embraced blockchain have diversified portfolios and will not go on their knees if blockchain does not work well for them. Other technology platforms can also help investors to narrow down their choices on the best alternative courses of action from what they have. It is also advisable to invest in what one has a passion. I would not advise you to invest in blockchain because a close relative or friend made a profit out of it without weighing your other options.